Hello and welcome to Market Domination. I'm Josh Lipton, live from our New York headquarters. There's less than an hour to go until the closing bell. Stocks under pressure here, and it's an even uglier day for crypto. Inez Frey joining us now to break down the headlines. Inez, what are you watching?
Josh, all three major averages right now are down. Technology leading to the downside. So we're watching the NASDAQ composite. It was down about almost 2% at the lows of the session. The S&P 500 down more than 1%, and the Dow off about 0.5%. I do want to point out what's happening with the US dollar, because remember, when the dollar goes higher, typically this means that equities tend to be under pressure. So we are looking at the US dollar above the Dixie, that's above the 100 level. So that is a multi-month high, if not a June high for the US dollar index. Looking under the hood at equities, I am watching what's happening with these sectors. As I mentioned, technology, consumer discretionary, these mega cap stocks that are under pressure, industrials also leading to the downside. And you've got Nvidia down more than 3.5%, Tesla that's down more than 4%, Palantir is down more than 9% despite its strong quarterly results. And then some of the other mega caps there that you see that are in the red. Apple is an outlier. It's up 0.4% today. Also taking a look at crypto, as you mentioned, absolutely tumbling today. We're watching Bitcoin that's down more than 5.5%. It did breach the $100,000 level earlier at around 99 and some. So look, at the lows of the session, it was down more than 6%. Bitcoin is now down about 20% from its all-time high, which was back at the beginning of October, north of 126,000 per token. Ether also down more than 11%. The cryptocurrency market has really been tumbling. Part of this has to do with liquidity concerns and not enough liquidity, or a liquidity crunch, so to speak, as strategists put it. But nonetheless, definitely extending its losses as we've seen weakness in crypto now over the last several sessions.
All right, thank you, Inez. Appreciate it. Rising fears about AI stock valuations weighing down on tech. This comes as investors now sift through the latest flurry of quarterly earnings. Here for a closer look, we've got John Blackledge, TD Cowen Managing Director and Senior Equity Research Analyst. John, great to see you as always. You look at stocks today, we're in the red here, John. And one theme that's been coming up today is this theme of AI valuations, John. I think folks are looking at a name like Palantir. They reported that was a solid report, John. Those were strong results, and the stock is still getting whacked here. This theme of AI valuations, John, I would love to get your take on it. Not specifically Palantir. I know you don't cover that name, but just the broader theme, John, just based on your coverage universe, how you think through it.
Yeah, I mean, and the three big tech names I cover, just kind of walk through them quickly, starting with Amazon. Amazon had a great quarter last week, stock moved, and then on the AI theme, they cut a deal with OpenAI on Monday, stock moves more. It's selling off a little bit today with the sell-off, as you guys led into. But for Amazon, shares are up 14% year to date. And up until last week, it really had lagged Meta and Google all year, but it's definitely catching up. It's trading at 29 times earnings. On our 26 estimates, we're looking for over 20% annual earnings growth the next 5 years. We expect to tie it in with the AI, with your question on AI, we expect further AWS revenue acceleration in the fourth quarter, and then revenue to accelerate more in 26, and then again in 27, off of this, kind of AI demand cycle that we're seeing. And so we like Amazon here despite the sell-off today. Our price target is $300. Moving on to Alphabet, Google, stock's up 46% year to date. It's had a really good move for two reasons, I think. One is the positive regulatory outcome for the DOJ search case a couple months ago. And then secondly, they're crushing it in AI across the company. One in search with the introduction of AI overviews and AI mode, it's driving higher engagement with Google Search. And then at Google Cloud, where the business has been accelerating, they have the AI tech stack and they're leveraging Gemini. They're leading foundation model. So Goog shares are trading at about 25 times earnings on our next year estimates. We have mid-teens earnings growth. We continue to like it here. Our price target is 335. Meta shares are now up 8% year to date. Shares sold off after they talked about the big AI spend, both CapEx spend and OpEx spend for next year, trading at 21 times earnings. We're looking for low teens annual earnings growth next 5 years. I think that this is the one company of the three that I cover that they need to kind of clarify the AI strategy, and we'll get more definitive kind of guide for 26 at 4Q earnings. But I would say the one area for Meta that's been outperforming is just the core business. And a lot of the spend that they're doing, you're seeing it like kind of one-to-one, like directly impact the core business, which has beaten several quarters in a row, and there's a chance for outperformance there. So we still like Meta. We have a buy-in $810 price target.
All right, so it sounds like, John, you're kind of saying, listen, the AI trend's intact, but as an investor, you gotta pick your spots. You like Amazon, Alphabet, and Meta. Here's another one you like, Uber. Now, they reported, John, this stock is getting hit too in what is being described, John, I'm seeing it as a muted adjusted earnings forecast. But what did you make of the results? And walk us through what you think explains the reaction here.
Yeah, the results were good and the guide was good. So the 3Q results, gross bookings beat expectations. They came in kind of at the high end of their guide, driven by user growth and accelerating trip growth. The 3Q EBITDA was within their guide. It was a little bit better than what we had. It was a touch light versus sell side consensus. And then the 4Q guide was strong. I mean, their gross bookings guide was 2 points ahead of us and sell side consensus at the midpoint. And then they were on the EBITDA guide at the midpoint. They beat sell side consensus. Uber shares, not unlike some of these other companies I just mentioned, were up 60% year to date going into earnings. You had the tech sell-off today. And if I was going to pick out one area, I would say that incremental delivery margins were a little bit lower than what we thought they would be. And to that, they talked about investing in their grocery and retail vertical within delivery. They're doing what a good growth company does. They're seeding new growth vectors. And this segment, grocery and retail, is about less than 15% of the delivery gross bookings business right now, but it's growing multiples faster than the restaurant business. So I think it was something like Uber shares were up a bunch this year. There was a bit of a sell-off today with tech, as we're talking about, and maybe there was a couple little areas where it was going to be difficult. It was a difficult setup for it to kind of outperform today, I think.
John, I only have about a minute left, but I want to get you out of here on this. You like Uber. You also like Uber's rival Lyft, which is scheduled to report results tomorrow. What are you expecting to hear there, John?
Yeah, we think it should be good for them. We have mid-teens gross bookings growth. We're kind of at the higher end of their guide, and we expect further margin expansion. Lyft shares up 55% year to date. It's been a good stock, but despite that, it's trading at less than 7 times EBITDA and at a 15% free cash flow yield. So we like Lyft at these levels going into tomorrow night. It's cheap relative to Uber. It's about 10 turns lower than Uber. They're going to benefit from this California insurance relief next year, as will Uber. That'll be a good driver for growth. And also in just generally insurance costs growth decelerating. And we also think we'll get some further autonomous announcements in the next several months and quarters. So like Lyft into tomorrow night, we have a buy-in $30 price target.
John, always great to see you. Appreciate your time and those picks.
Thank you. Appreciate it.
Tomorrow, the Supreme Court will hear arguments around President Trump's use of emergency powers to impose tariffs. Experts are calling the case a toss-up. Joining us now on this is Yahoo Finance Washington correspondent Ben Werschko. Ben, walk us through what is at stake in the case.
Yeah, good afternoon, Josh. So this case tomorrow centers around a 1977 law called the International Emergency Economic Powers Act, IEEPA for short, which Trump has really embraced as the centerpiece of his second-term tariff agenda. This law gives the president latitude to respond to, quote, unusual and extraordinary economic threats. The law specifically does not notably lay out tariffs as a specific remedy. So that's one of the questions before the court. Basically, can the president use this law, as Trump has done, to levy tariffs? The second part of this law is the question of whether Trump is overstepping in terms of his economic emergencies. He's declared emergencies on everything from fentanyl to trade imbalances to specific actions of other countries he doesn't like, to declare an emergency. So that's going to be another aspect of what is expected to be sort of pretty complex arguments tomorrow, ahead of a decision sort of set for the end of the year. What this leads to, I think, in terms of people's expectations, is a lot of different outcomes. There's a sort of thumbs up, thumbs down on tariffs, but there's also a lot of middle ground here. Are some emergencies valid, others not? All of this will be up for conversation tomorrow with these Supreme Court justices, with the bottom line here that a huge chunk of Trump's tariffs are under review. Sector-specific tariffs are not under debate tomorrow, but Oxford Economics calculates Trump's overall tariffs right now on the world are about 13.4%. All tariffs on all nations average out to that. If these tariffs are zeroed out in an eventual decision, that drops to 7.8%. So it basically halves his tariffs, even as Trump has promised to replace them if the ruling doesn't go his way.
So if I'm a viewer, I'm listening to all this, Ben. I'm an investor. Walk me through, just the market implications here. If the justices do appear likely to rule against tariffs.
Yeah. So there's kind of short-term market implications and long-term. I'll start with the short-term because tomorrow, notably, is not when the decision comes down. This is when the lawyers go before the court. The justices ask questions, but they don't offer a final ruling. So I think there's going to be a lot of questions in terms of what do we know about the justices' positions on this issue, basically divined from their questions. This is how it works on every case. Is you kind of hear how they ask the question, and you try to guess how they're going to respond overall. So that's going to be an initial one, and then of course there's a longer term. I think I wrote today about how it's kind of a choose your own adventure a little bit out there in terms of the previews here, because some people there's no clear consensus. Some people lean a little bit towards a pro-Trump ruling, some lean against, but it's all over the place. I think Brian Gardner of Stifel offered kind of a good framework for folks tomorrow. His assumption is that the markets have kind of tentatively priced in a pro-Trump ruling here. This is a conservative court, a 6-3 majority. Trump himself named 3 of the justices on the court. So the assumption here is that there is a kind of pro-Trump bent to this that's likely to be the final outcome. Where that gets interesting is tomorrow is if any of these justices ask really pointed or really critical questions, do markets react as this goes against their assumptions? We'll see about that. We'll see the back and forth there. Brian Gardner, for his overall point, expects a pro-Trump ruling in the end, but that's not going to be till the end of the year or early next year.
Ben, thank you, sir. Appreciate it.
Sure thing.
Coming up, Beta Technology is going public today. The CEO joins me next on Market Domination. Now time for some of today's trending tickers: Apple, Papa John's, and Denny's. We're going to start off here with Apple. Tech giant is looking to challenge the Chromebook with its own low-cost laptop market. According to Bloomberg, codenamed J700, the device will be priced well under $1,000. Joining me on this, we got Yahoo Finance senior reporter Brooke DePalma. So Brooke, this is Bloomberg reporting. All over this one. All right. Apple's preparing to enter the low-cost laptop market. This will be for the first time. Budget Mac, taking on the Chromebook, taking on entry-level Windows PCs. Apple aiming to launch it in the first half of next year. This would be a strategic pivot for Apple. I mean, usually you think Apple, all right, playing in that premium high end.
Yeah, so this caters more towards those students, maybe those low-income consumers who haven't been doing well in this environment, and also maybe more of a casual user. I feel like every time I get a new laptop, it runs out of storage right away, so not trying to go about that. But 3 things that really stood out to me here is 1, it's catering towards that low-income consumer at that low cost. 2, this just speaks volumes to Apple's business segment that strictly is around devices. We know that in last quarter, the Mac segment was one of the fastest growing hardware categories. It was up about 13% to $8.7 billion. So this really caters to Apple's strong suit, new innovation around its key products, those physical devices. And 3, this reminds me of the conversations that I've been having with Best Buy's CEO. We're now coming up 5 years, more than 5 years now, post-COVID. And we think about that replacement cycle. Any consumers who maybe bought new tech during that time, maybe maybe now's the time they're looking for that newer laptop, maybe at this less higher price tag as well.
All right, from Macs to pizza, turning out to Papa John's. Shares of the pizza chain sinking on a Reuters report that Apollo Global has withdrawn the offer to take Papa John's private. The deal valued that chain at $64 a share. We do have to note Apollo, of course, is Yahoo's parent company here. So this is per Reuters, citing sources that Apollo pulled its bid about a week ago. They're talking about how consumers, this coming as consumers did tighten spending, quick service restaurant industry starts to stumble a bit. Brooke.
Yeah, this is certainly not what investors want to hear, especially heading into that Thursday earnings report. Papa John's is set to report its third quarter results on Thursday. And what we know heading into that report is yet again, Wall Street doesn't expect a huge growth in same-store sales. It's only set to increase about 1.7%. They're also expected to see lower revenue than they saw in Q2. And so really this is sort of an environment where we continue to see Papa John's is falling behind the other key players where consumers are seeking out value. They're supposed to be winning in this environment. Pizza typically does well when consumers pull back, and they're just they're not able to swing this essentially. And what I heard from different sources that I've been speaking to over the course of today, because I know we'll get to Denny's next, but this is one of many different sales and that we're hearing. And just right now, it seems like in this sort of environment, maybe this deal just wasn't sweet enough.
Yeah, I'll tell you where pizza does very well. The Lipton House.
Ooh.
Continued strength at Team Lipton. Lastly, another go private deal. This is a group of investors will acquire Denny's for $620 million. The stock is surging on that news, on track for its biggest intraday gain in over 20 years.
Wow.
So Denny's on the move. We got a go private deal. Analysts, I'm just seeing weighing in here. Team at Oppenheimer site is telling their clients they don't expect a competitive bidding process. They do think this deal closes as planned Q1 26.
Yeah, it seems like a pretty much of a done deal, and that's why we see the shares surging today more than 60%. And as I was saying, I was speaking to a few sources just about this scene that we're seeing. Not only is Papa John's no longer getting bought out by Apollo, but we also had Yum Brands saying that they're looking to sell off Pizza Hut. Then we also have the sale of Denny's to this private equity firm and a franchise operator who has been with the company for quite some time. And what this source had told me was that ultimately these companies are seeing this as undervalued opportunities to turn around and make pretty significant profits, given that right now Denny's, it was seeing same-store sales growth decline yet again, down about 2.9%. It also has that Kiki's brand. That's a new breakfast chain that they recently acquired. That was up. And so they see these sort of environment where, one, we're seeing a consumer slowdown. We also got that Fed rate cut at the end of October. That's allowing lower interest rates here. And also, based upon the previous knowledge, these private equity companies are saying, we see this opportunity. We can pivot these companies. We can turn them around. And that's why you're seeing not only Denny's, but all these other sales as well.
All right. Thank you, Brooke. Appreciate it. For more on what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing tickers. Well, Beta Technologies, an electric aircraft maker, going public on the New York Stock Exchange today. Company pricing the stock at $34 a share, reversing early declines, and now it is trading higher. Joining me, we have Kyle Clark, Beta founder and CEO. Kyle, it is great to see you. Congrats to you, Kyle. Big day for you, big day for this company. Maybe start here, Kyle. I'm interested, why did you decide to go public now, Kyle? What did you see out there that made you think, you know what, now's the time to test these public markets?
It's awesome to be here. First of all, thank you. Look, it was a long-term plan of the business, and we knew we had to get to a couple of key milestones independent of the financial markets to go public. And one was being in production with known cost of bills of materials, a good sales pipeline with deposit-backed orders, and a major certification behind us. And once we met those four things, production, cost of bills of materials, pipeline, and certifications behind us, we knew that we could then give good advice to the street. And that was a goal we set a long time ago. And we started this process midsummer, and we executed on it today.
So you go public, Kyle, you raise a ton of money. Walk me through how and where this capital now gets deployed.
Yeah, so we further our industrialization and our commercialization. We've been building aircraft, deploying them all around the world, up in Norway, down in New Zealand, throughout the entire United States. And now it's time to double down on our vertical integration strategies around manufacturing and industrialization to help drive the unit economics of the aircraft down into levels that allow us to scale with the market demand we've created.
How big, Kyle, is the market opportunity you're attacking here? How big is it? How fast is it growing?
Wow, it's a great question. It's huge. We have reduced the cost of flying substantially by going electric. And that reduces, it effectively eliminates the fuel cost and drastically reduces the maintenance cost, which walks you back up the transportation curve to much larger volumes than aviation has ever seen. And that's where the TAM gets quite large. And we're starting in cargo medical logistics, which has a huge TAM alone, and then going on to passenger, which is even greater. So whatever we're flying today, if you chop that cost by 40 to 70%, the TAM gets really big, really quick.
So you've already delivered aircraft, Kyle. You've got pilot programs with customers. How quickly can you ramp from here?
You know, we put all the stuff in the ground. We built a huge facility up in Burlington, Vermont, that has a capability of building up to 300 aircraft a year. We are ramping into that over the next couple of years. Then we go on to expand that facility. Really, I hate to say it, but right now, this is a supply side constrained environment. This capital raise allows us to better close that gap. There's much more demand than any one of us makers can produce in aircraft. And deploying this capital into like that vertical integration and this industrialization and scaling is exactly what we need to do right now to take advantage of these tailwinds.
I'm curious, Kyle, this administration and this FAA under Sean Duffy, how, if at all, is it different than previous administrations, Kyle? Are you finding that, changes have been made easier or harder to work with?
Yeah, 1,000 times easier. The new administration is operating the FAA like a business. Bedford and Duffy together have unblocked a huge number of regulatory burdens that we previously were running headlong into. And it really came down to clarity of communication. I chair one of the key industry trade boards on communicating with the FAA. And through that board, we've gotten policy put in place that unblocks, literally kicks the door open on CERT and regulatory strategy. And on top of that, the White House issued an executive order that's good for the entire industry. And the Department of Transportation in September immediately put that into clarity on how we're going to deploy it. And over the next year, we get to start domestically deploying pre-certified aircraft.
In terms of the broader, just competitive landscape, Kyle, I'm sure viewers think of names like Joby, like Archer. What makes you all different?
I'm an engineer. We've focused on the first principle physics of flight. Make it light, make it slippery, carry a lot of energy, and convert that precious energy into propulsion efficiently. And we've focused on the core enabling technologies to do that, and we've gone and done it. We've set the world records in all of the meaningful metrics of aviation for electrification. So a first principle physics approach, simplification, deletion of requirements, and a pragmatic approach to certification is how we're running beta. That isn't the case across the industry, but this is how we've focused our engineering, technical, and industrialization efforts. And simplification has been a winning strategy in aviation for as long as it's existed.
Kyle, great to have you on the show, and congrats again on a big day.
Awesome. Thank you, sir.
Coming up, we have the closing bell on Wall Street plus earnings from AMD. Don't go anywhere. That is the closing bell on Wall Street, and now it's market domination over time. We're giving you full coverage of all the moves to get you up to speed on the action from today's trade. And Yahoo Finance's Inez Ferre joins us now with the latest market action. Inez.
Josh, losses across the board with the Dow down 0.5%, the S&P 500 also down more than 1%, snapping a two-day win streak, and the NASDAQ composite down the most, down more than 2% as tech got hit today. Taking a look at the U.S. dollar index, that's gone above 100. That has put pressure on these markets as well. And if we look at the sector action, as I mentioned, technology, consumer discretionary, those were the biggest losers today. Over on the NASDAQ 100, NVIDIA slipping 4%. You have Palantir down 8%. And then Tesla down more than 5% ahead of its shareholder meeting on a Thursday. The semiconductors, NVIDIA you saw, but look at the rest of them. Broadcom, AMD down more than 3% as well. So you're seeing a lot of losses across the board. Over on the crypto space, This space has been under pressure now for several sessions. We're looking at Bitcoin that's down more than 5%, briefly dipping below the 100,000 level. That's its lowest level since June. Ether down more than 10%. You have seen this token down. It's at 3,100 right now, or 3,200. Remember that the highs were around 4,600. And then Solana also down as well. And the crypto-related stocks also getting hit over concerns about liquidity, which is very necessary for the crypto market. But across the board, we've seen losses, including also on the commodity space. Oil down and gold down as well, Josh.
All right, thank you, Inez. Well, tech stocks leading the declines on Wall Street as investors grow wary of frothy valuations for AI-related stocks. This comes as big bank leaders warn of a potential pullback. Joining me now, we got David Royal, Thrivent Chief Financial and Investment Officer. David, always great to see you. So we have red across the board today, David. Do you look at today's action and think, okay, you know what, it's one day, let's not overstate it, the trend is intact? Or no, David, you look at this and you say, you know what, something is shifting here?
I think the trend is generally intact. I do think we started to see some weakness after the Fed press conference when Powell said a December rate cut is far from a foregone conclusion.
Right, far from it, I think.
Far from it. And the probabilities went down from kind of mid-80s to 90% chance of a December cut down in kind of the mid-60s where it is now. I think when you already had high valuations, you introduce some uncertainty about a December rate cut. I think it's probably the combination of those two. I do think the trend is probably still likely intact, but I think we're going to see some more volatility.
Can I ask you, does the market require that December cut to move higher?
I don't know that it requires it to move higher. It's been expecting it. And more importantly, the market doesn't like uncertainty. So I think we're going to see a higher level of rate volatility, which can drive additional equity volatility, which can, put pressure, especially when you have higher valuations.
Let's say, David Royal, I make you a central banker. Are you voting for that cut? You think it's required? Do you think it's necessary?
I would vote for the cut, yeah.
Well, how come?
I think we're seeing weakening unemployment. The rolling 3-month average, prior, of course, we didn't get last month's jobs data, was 29,000 over the rolling 3 months. If you go back to August of 2024, Powell's Jackson Hole speech, he said that any further weakening of the employment market would be unwelcome. The rolling 3-month average then was 120,000, and at the time he said that, it was actually 170 before revisions.
So they'd be cutting, David, though, even while inflation's still above target.
They would, and after that Jackson Hole speech, they cut 100 basis points in the next 3 meetings. I think the difference is, and this is the Fed's concern, the inflation trend is a lot less favorable than it was back then. We've kind of stalled. We've seen a little uptick in goods inflation, which has that PCE kind of stubbornly at 2.9%. Although I was surprised when Chair Powell said, absent tariffs, he thought
that's right.
It'd be 2.3 or 2.4. Yeah. I was shocked he was so specific. Who knew?
Yeah. Let me ask you, so that's the Fed, but in today's trade also, David, and we've been talking this on the show today, AI valuations were really in focus. People looked at names like Palantir. That was a solid report. Those were strong results, and it still got whacked. Not to get your take specifically on Palantir, but how are you thinking about, as an investor, this theme of AI valuations?
It's tough, but a lot of these companies, unlike the tech bubble, are funding the AI investments out of earnings, out of cash flow, and so that's a positive. But I think you kind of have to look at it company by company. What's the valuation, thesis of that company going forward? You saw some concern in Meta earnings around CapEx. What does the business model look like going forward? Is that going to be a drain on the buybacks that have really driven a lot of the earnings of these companies?
So, given the backdrop, the environment we find ourselves in, bottom line, where do you want to be invested, Dave? What sectors still look attractive to you here?
We still like big cap tech. You are seeing some signs of weakening in the economy, so I think you'd lean away from the more cyclical sectors, maybe consumer discretionary. Industrials, cyclicals, things like that. Within the consumer discretionary, though, I think you're seeing a real bifurcation in the consumer. You're seeing, people say the K-shaped economy, but the upper-end consumer doing better than the lower-end consumer, even more so than usual. So I think you'd want to be leaning into companies that maybe serve the higher-end consumer, and particularly companies that aren't relying on macro tailwinds for earnings, but maybe have product innovations that can drive earnings.
To your point, it's interesting. Listen, we don't have all the government data we would like, but we do have earnings, and they give us a line of sight into the consumer. consumer. And to your point, David, you look at some of the commentary. Like here's Clorox saying consumers remain under pressure. They talk about how this is driving value-seeking behaviors across all income segments. But then here comes Marriott saying our luxury hotels continue to outperform, driven by robust demand. Is that kind of what you're talking about here?
I think, yeah, you're seeing the upper end consumer outperform, but I liked your point about people trading down at all income levels, because I think you're seeing that as well.
What about the government shutdown? Are you getting a lot of questions about that from your clients?
We do. We get questions, and often questions, a lot of it, and from our advisors as well, around the lack of government data. Like, how does the Fed make a decision? How do people even know how to manage rates in the economy in the absence of data?
And what do you tell them?
We look at the alternative data sources. We'll get ADP. I think tomorrow morning. The last ADP report was weaker. The Fed has called out a number of the state jobless claims have been stronger. But one thing that we've looked at going forward is the Challenger Gray and Christmas report about future hiring plans that will come out on Thursday. Normally by now you'd have 600,000 announced hires, typically among retail for the holiday hiring season. It was 115,000 through September. We'll see. And two of the biggest firms for hiring are Target at 100,000 last year and UPS at 125. Both of those are firms that have announced layoffs.
And so let me ask you this final question. You look at that data, right? Those metrics. What do you do with that as an investor with that information?
It's one of the reasons why I think the Fed should cut. I would be looking to potentially lengthen duration if you were concerned that the Fed was behind the curve and we might see some economic slowing. All
right, David, always great to see you, especially on set. Thank you. Coming up, earnings coming. We're going to check in on the latest results from two tech companies on the other side of the break. ZoomInfo posting better than expected third quarter results on Monday. The data platform firm leaning more into artificial intelligence, but investors watching to see if the company's AI push is truly reigniting momentum. Joining me now, we got ZoomInfo CEO Henry Schuck. Henry, great to see you, especially on set. So you reported results, Henry. Let's start there with those results. Just walk me through what you're seeing in the business, Henry, and then also what you meant here, because you talked about, Henry, how the results, they validated your strategic focus and what you meant by that.
Yeah, great. Thank you for having me on. Look, I think we were really proud of the results this quarter. We beat the top end of our guidance, both on the top line and the bottom line. We had record revenue in the quarter with the business group 5% year over year. We accelerated growth in our upmarket segment. That business went from 4% growth last quarter to 6% growth this quarter. Our downmarket segment is stabilizing. We're seeing more and more customers come to us to help them build their AI data foundation that they need to build agents and optimize their workflows and their sales teams. When I said it validated our focus, at the beginning of this year, we told our shareholders there's a key strategy in our business, two key strategies. The first one is we want to move the business upmarket. Today, the upmarket business is now 73% of our business. That's up 10 points from 2 years ago. And so we're moving more and more of our business upmarket to larger companies. That provides us with much more durable growth. We wanted to stabilize our down market segment, which stabilized in the quarter, and we want to be building best-in-class AI products that our customers are consuming and using, and that's driving efficiencies in their business. And this quarter was the first quarter that we saw full lapping of 1 year of our AI products being in market. And what we saw, which was great, was our customers who leverage our AI products are renewing significantly higher than our customers on our legacy products. So as we're releasing new products that are AI first to our customer base, they're using them more, engagement is higher, and they're renewing and retaining at higher rates as well.
Let me ask you, there's this big debate right now, maybe it's the debate for investors, which is whether what we're seeing is this AI boom or an AI bubble. You're right on the front lines of all this, and so I'm just curious to get your thoughts as an exec, as a CEO. How are you thinking about that debate?
Yeah, look, I think AI is here to stay. It's not going anywhere. What customers want, though, is the ability to show results from using AI in their businesses. Every executive that I talk to is saying that their leadership, their board is telling them, where are the AI efficiencies in our business? And they're looking to key strategic partners to help them deliver on that strategy to drive the efficiencies in their business. We believe, we provide data and software to salespeople to drive their ability to identify their next best customers. And we really believe that without data, proprietary data, it's very difficult to deliver a best-in-class AI solution that actually drives results in businesses. And we've been really focused on delivering not only the software and the AI on top of that software, but the data foundation that actually makes AI valuable.
I'm curious here, you do have, obviously competition, there's rivals. What do you think about the marketplace in terms of your place in it and what your competitive advantages are, Henry?
Yeah, I think first it's our proprietary data asset. One of our core businesses, the second largest business in ZoomInfo, is our operations business. That business grew over 20% year over year in the quarter. What that business does is it provides companies, mainly large enterprises, the data foundation that they need to go build AI agents, to go build AI workflows on top of. And so companies more and more are coming to us and saying, hey, I've got all these AI initiatives that I need to do, but I don't have data inside of my company that's mastered in a way that I can leverage with AI. All of this talk about bad data into the AI models, bad data out. We're working to solve that across our customer base, which is 35,000 customers from the largest Fortune 10 companies to small solopreneurs.
Talk to me about Salesforce, Henry, because it sounds like they're going to roll out Agentforce sales with your integrations. Yep. Walk me through that, and what does that mean for growth looking ahead?
Yeah, so one of the things that we've learned is when companies go to build AI for their sales teams and build AI workflow for their sales teams, the first place they go look is the data inside of their CRM. And the data inside of their CRM lacks context. It doesn't have every company that they should be selling to, every executive they should be selling to. It doesn't have the data on what's happening at those companies. Are they growing? Are they shrinking? Are they doing M&A? Have they visited your website? Are they researching competitors? And so if you want to build a really great prospecting agent, and Salesforce and Agentforce has a revenue and prospecting agent, that needs to be grounded in third-party data. And what ZoomInfo does inside of Agentforce is it grounds the prospecting agent and the revenue agent with ZoomInfo data so that when their sellers are looking for their next best customer, when they're ranking accounts that they should be reaching out to, that information is grounded in ZoomInfo data, so they have the most accurate, constantly up-to-date data that the AI is using to give recommendations to the sales teams.
In terms of capital return, I saw you bought back about $87 million, I think, this quarter. As a CEO, how do you think about priorities there in terms of buybacks, M&A, R&D?
Yeah, look, there's always something that you're trying to balance. I think the thing that we think about most today is that the price of our stock is below the intrinsic value that we believe the stock should be trading at. We have a lot of conviction in the future growth of the business, and as long as the stock is trading below our intrinsic value, we're going to be aggressive buyers of our shares. We think that's the best way to return capital to our shareholders. We're also looking for opportunities within the business to continue to invest in, but right now, one of the best uses of our cash is buying back shares of our own stock, and we're going to continue to be aggressive buyers of that.
Henry, great to see you, especially on set. Thank you, sir.
Absolutely. Thank you for having me.
Well, AMD's third quarter results, they are just hitting the wire right now. Let's take a look at those numbers. Q3 adjusted EPS 120. The street is at 117, so that's a beat. Q3 revenue, let's look at the top line, $9.25 billion. The estimate was $8.74 billion, so that's also a beat. I'm just looking for the operating margins. Here they are. Q3 adjusted operating margins, 24%. Consensus was at 24.8%. Now let's get to the forecast. Q4 revenue. AMD is guiding for between 9.3 and 9.9 billion. The street was at 9.21 billion. And in terms of their gross margin guidance, they say to look for about 54.5%. That's smack in line with consensus. At least initially here, the after hours, we don't see a ton of movement. Of course, remember, this stock had simply a remarkable move heading into this print. It was up about 50% just over the past month. That was, news of kind of the deals that AMD had been announcing with the likes of OpenAI and Oracle, and investors had clearly gotten very excited about what some of those deals meant for AMD looking ahead, both financially and strategically. Of course, we're also going to want a lot more color about the PC market, about the traditional server market, about how AMD is thinking about that China AI business looking ahead, if there will be a business, all of that will be in focus on the call. And we have a very smart analyst as well coming up who's going to help us walk through these results and how we should be thinking through them. Time now for to watch Wednesday, November 5th. Going to start off right here in New York City. Polls closing at 9 p.m. Eastern for the city's high-stakes mayoral race, where progressive candidate Zohran Mamdani is heavily favored. But President Trump shaking things up on Monday by endorsing former Governor Andrew Cuomo on Truth Social. Investors watch to see how the next mayor's policies on taxes, housing, and business could ripple out to the broader economy. We're going to take a look at earnings as well. Another big day of reports on Wednesday, including Toyota, McDonald's, and Robinhood. Robinhood announced the results for the third quarter after the markets closed. Analysts keeping a close eye on how active retail traders were in the quarter and how Robinhood's new products are doing, especially its prediction markets. That business more than doubled in Q2, showing early momentum and growth potential. And finally, ADP employment data. That's coming out on Wednesday. Economists forecasting private companies adding 40,000 jobs in October. This is coming after cutting 32,000 jobs in September, a sign that hiring is picking back up. Well, that's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell. But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market move stories. Stay tuned.